How you been?
I'm well. How about you guys?
Good, doing great. All I can tell you is I keep hearing about how cool your conference was and all the high level rock and roll and all the fun. And tell me
Yeah,
about
we had a really good time. I tell you, it was really great seeing everybody again. That's one of the things I said in my keynote. I didn't realize how much, maybe I did. I missed our customers a great deal. I missed our partners a great deal. I hadn't been with more than 25 employees in 2.5 years. No, 2 years, I'll say. And just being together, it was somewhat emotional in some ways, seeing people for the first time and being able to reach out and shake hands and hug people. And, I was delighted. And it was in Nashville. So clearly it was a great place to have a conference, great music. We did have some pretty big name stars that showed up and played some songs for us. And I think everybody enjoyed it. 1,300 people gathered in a large hall, just having a good time and learning a lot. I mean, that's our conference is really more about learning than it is anything. So,
yeah, I used to go years ago in the Malazai days, and I think I've told Dave before. One of the time, a bunch of Malazai employees were all on the plane going to the CSI conference in Nashville, and I got a cowboy hat, and everybody's like, "Why are you bringing your cow?" I'm like, "You just wait till we get there, man."
yeah.
Half the crowd, right? All the bankers and CSI people and everybody. I'm like, these are people like us, man. Pretty cool.
Well, you'll be happy to know that we gave every one of our customers and prospects a cowboy hat when they got there. We had a giant wall. We had people come in. They had about 20 different styles to choose from and different sizes. And so, yeah, there were a lot of cowboy hats at our conference. No doubt. You would have fit right in.
I love it, man. It's great.
natural.
So tell me, I'm just super intrigued to know amongst the customer base, what were you guys talking about and what were they asking about?
Well, that's a good question. We're talking a lot about not just where we are as a company, but where we are as an industry. And, some of the changes that are taking place as we speak, with the idea around open banking and banking as a service. We talked a lot about that. We talked a lot about community banks. From my keynote, I made mention of the fact that 60% of the first round of PPP was handled by community banks. 45% of round two was handled by community banks. If you think about the number of organizations that are still around today because of the community bank, you think about the number of people that are still employed today because of the community bank, I think it's something we ought to celebrate. We're delighted to be part of this, but truly it is part of our ecosystem as a society that I think we can't do without. I think they're irreplaceable. And I sure hope the Fed figures that out and starts allowing some de novo activity, because there's a lot of communities right now that are they don't have the resource, they don't have the bank, because so many are pulling out, so many larger institutions are pulling out. But we need to celebrate community banks. I mean, the number of sleepless nights, sleeping in the branch to be able to get that PPP loan in first thing in the morning, so they made sure that they got that customer some money. I mean, we should absolutely celebrate that.
Yeah, we were talking to people at 2 and 3 o'clock in the morning, man.
Yeah, you're so right. And I mean, this is a story that, everybody's like, yeah, I heard it before. And it's like, hold on. I mean, seriously, I'm talking about people eating cold pizza at 2 o'clock in the morning so they can get one more loan out. And to them, it was seriously emotional. This is the people they sit next to in church. It's the people that, I tell the story about the lady who talked about, the pitcher on the baseball team's parents, that have this business. And it's not just small town. This is the biggest thing I think everybody misses. There's a lot of vast banks that enabled fintechs to go out and get these loans. So it was a multi-layered tier that went on here and a universal effort across. And again, to your point, if you took out that cog in the wheel, oh man, alive, what a loss. And the second, your other point, because we have such an imbalance between de novos and mergers. I mean, everybody gets approved for a merger in a sweat and banks go away like this or chartered. And to get a new one is just, the bar is so high. Huge, and the time that it takes and additional capital every time you turn around. And so we've got a crazy imbalance that's creating a decline.
But at the same time, we're seeing fintechs buying charters.
Oh yeah, for sure.
Interesting. And I mean, look, nobody wants to lose a charter. So that's actually an interesting way to look at it.
Yeah.
Some of these fintechs out there, and you got to have the founders themselves personally actually have to be the investors, right? And so you see this over a period of time. They'll come in, they'll take a board seat, which in theory is a learning exercise, right? And then they pick up the equity. And I think it's interesting when these fintechs are picking up charters, we're not actually losing a charter as you would in a merger. So I'd say glass half full. And also we're seeing some pretty wicked dollars going in there, because if you look at the fintech side of the world, what was it? One of them, we did a study and came out at roughly 300 million that they spent trying to get a charter.
Right.
So, I mean, just putting in perspective, that is a seriously valuable commodity, right?
So, so you've got neat things that are tricky things that are going on now too. So you get like what we call change in control. You get a 51% ownership. You didn't actually do a buy, but you got on board and then eventually got some more stock and then snuck your way in the back door to get your charter. So here's the thing. We live in a time in inflation where everybody's like, how much is a gallon of milk? And you have a heart attack when you see the price of a ribeye steak, right? Mm-hmm. The same thing is really affecting prices in banking, but bankers haven't figured it out. And so it's like, think about this for a second. What does it cost to get this charter? And what is that worth to a fintech? We don't lose a bank charter if you sell your bank to, a fintech. They continue to keep that charter operational and probably turned into a Bass bank. That said, the multiple that they would pay if demanded is out there. But what we do as an industry is we go back to our old corner and we go investment banking. Okay, we're going to pay this much per book, 5 times book. And
investment bankers have never understood technology. I mean, Dave, you've seen it in things like conversion files, right? All the conversion principles at play, they show up way too late.
Right.
All of this should have been baked into the concept prior.
It should have been a targeting issue.
I mean, look, if I was an investment banker, if I was a banker looking to buy or sell, I'd be calling you saying, hey, I'm one of your banks. Does one of your other banks want to buy me? That way it's all state. Would you do?
We definitely play matchmaker.
Yeah.
Would you do me a deal? Yeah. I like that.
Yeah. Well, we don't do them a deal, but we certainly let them know if there's others in their market that are interested in growing through acquisition.
So, I mean,
that does work in a lot of cases.
You bet.
Well, hey, I got a ton of questions for you. And I know we have a great deal of time, so let's get right to the heart. So I wanted to talk about this, like 3 or 4 different things here: organic growth, your tech stack investments, all the different things that you're doing there.
Yeah.
We sold a lot of cordials. I've seen a bunch, heard about a bunch, been a part of a bunch. You guys seem to be doing really well there. I know there's some, we won't pick on anybody, but there's definitely some cores that are struggling. There's definitely some cores that have shifted their focus from core, which has been a little interesting. And I mean, to your point of it's an interesting time in the landscape, but you guys seem to be doing really well in core sales.
Well, we are. Using your own data, because we use FedFis data to figure this out, because you guys track when there's a change of a provider. And if we look at the last 5 years, a little over 25% of banks that changed providers didn't go from one product in a provider's product set to another product in a product set, but changed providers in general. We won 26% of those in the last 5 years. I think that's pretty telling. We've increased our market share from a little over 7% to almost 10% now in that short period of time. I think it goes back to an idea around quality and this notion around customer service. We do think that's a secret sauce that's hard to replicate, especially with the larger ones. It's in our business plan. So we add additional clients, we add additional personnel, and it kind of just flows. So we maintain a relationship with one of our relationship managers has no more than, they have, in some cases, have a little bit more. 9 is the average, though, number of banks that a relationship manager has. Larger institutions that we have, up to 10 billion or so, they probably have a lot less that they have to deal with. So a relationship manager may have 2 or 3. But we think it's important that we have this high touch strategy. It helps us align business strategy with their business strategy. We have something we call a managed account plan, which allows us to make sure that we understand what their growth initiatives are, what their needs are, and then how can we help fill those needs, or how can we point them to somebody that can fill those needs? I mean, it's a partnership. And I think, 10 years ago, maybe even a little bit longer than that, there were a lot of companies in our space that saw that relationship as a partnership. It wasn't just a number. I think in the last decade, we've seen a flight to managing to the dollar, managing to the shareholder, and we're publicly traded. So, I do have that as a constituent. But I understand that my success doesn't happen unless my customer is successful. And so that realization is critical.
What is that? Crazy talk?
idea.
That's crazy talk.
Yeah, crazy talk.
I know.
Crazy talk.
Hey, we're the same way over here. We run we're, for 5 or 6 years now, north of 98% renewals. We bake that not only into, to your point, kind of business plan, but we bake that into our success strategy, right? So similar concept of we call it the 398s, right? So 98% capture of everything we're after, 98% accuracy, and that leads to 98% renewals. So we even bake customer service, to your point, and renewals. We bake that into our product creation, into our roadmap, into our data strategy.
There's a ton of data that we do not publish that other people would,
because it doesn't meet our bar.
It doesn't have, that's right. It doesn't meet our standards.
Yeah.
So a company your size doing things the way you're doing with a customer focus that sets a standard around the customer focus and satisfaction levels. Wow. I mean, of course, I think the numbers you just iterated there kind of bear that out.
And it's funny because customer service, I feel like, is so overused, right? Or it's like, it's one of those check boxes that's way down there, and it should in all of our minds, like when you actually see it in practice, it is the difference maker.
Okay. So here's a really good point. So we're talking here with fourth largest core in the country. David Culbertson, CEO, CSI. You guys have done a lot of right things, and the competition out there is, as you move up the food chain into Jack Henry, FIS, and Fiserv, and you talk about service levels, and everybody wants the SLAs in their contract and all that. But at the end of this, when the ox is in the ditch, there isn't a hell of a lot you can do but get it out, and everybody takes their turn in the ring, so to speak. But when you have many, many cores that you're trying to work with, it makes this more difficult to provide a service level. And you guys kind of have gotten around that in a different way.
Yeah, I think so. But ma'am, I'm going to give you all the secret sauce, and anybody that watches this will hear it from now on and be able to replicate this if they can. I think it's difficult to do. But we start with a pretty unique strategy, and that is we're an employee first company. We believe that if you treat your employees with dignity and respect, and if you treat them like they can make a difference, they'll make a difference. And if you put them in the seat where they can have the most impact, where they enjoy their job, they're going to take care of the customer. And the relationships that they have with the customer and that we have with the customer are directly tied to the relationships they have with those relationship managers and other people in our customer service area. And if our customer service is at the highest quality and our customers are satisfied, then we can do what we did at our conference and have 150 people from prospect banks that show up, and we let them go. Let them talk to anybody there. We don't kind of guide them around and say, don't talk to that person. Yeah, go talk to anybody. And
I've seen this before.
I've been in it, yeah.
For everybody that doesn't know what he's talking about, it's like you're put into a room of specific people you're supposed to talk to, and you're shepherded away.
You get a special badge.
Yes.
Right. And you get walls doors that won't unlock for you, right?
Yeah, it's abnormal, I think, when a core is like, come in, talk to everybody.
Well, anybody.
Anybody. Prospects that maybe have done this before, existing customers, and just let an open dialogue happen, because there's too much of this. Let's keep the cloak and over this thing so that we only show the message that we want to be seen. Open this up. And win or lose on your merits, and win or lose on your customer relationships to provide you new customers. I think
part of it is a mutual respect. And I didn't get to the final stage, but it's employee, then customer. And if we do all those things right, then the shareholder is going to be happy. It's not a shareholder first mentality.
Yeah.
But one of the other things that we do is, we're very honest. Integrity is a big deal to me. And we set in front of our clients in a strategy session, the leadership team of CSI, this is at the conference, and they can ask us anything, and we'll be honest with them about it. And, sometimes we make mistakes, and it's how you deal with those times that really make an impact. And we'll admit it. And I think that's maybe somewhat unique, especially in the top, 4 cores. I know that there are some smaller cores that do that kind of thing. And I respect that. I mean, admitting you're wrong about something is not easy for a lot of people to do, but we all are wrong about some things.
And it's how we learn. I mean, I'm a great example here, guys. Everybody's like, how do you know all
That's what
that?
Dave was telling me when we talked last. Yeah.
I made all the mistakes. That's how I learned all this stuff.
Right.
Yeah.
I love it.
It's a good thing.
So what's the, I mean, first off, let me say again, I really appreciate this because, there's, I don't want to say top guys versus other guys are too small to really pull this off, but there's a big range here and you guys have a lot of institutions, and to be able to have that service level success and to have that rapport with your customers that actually, feeds future business for you is really amazing.
You bet.
So let's talk about a little bit about your growth strategies going forward, where you're investing, where you want to see.
Yeah.
You got a lot of technology stuff going on too. And I know, I've hung out with a bunch, yourself and others at AFT on the team. And to your point on employees, everybody's jazzed up. Everybody wants to, let me tell you this cool thing we're working on, right? So you got a lot of cool stuff going on.
We do. And it's a variety of things. We're making the largest investment in our company history this year in new technology. And it's many 7 figures that we're investing in new stuff. And last year we hired a new CTO. I spent 9 months trying to find the person that I thought would be the right person. I finally found that person, and his name is Ridin. He was a senior vice president of technology for Equifax. He was the guy that was charged with fixing the breach after the breach happened. And so when he came over to CSI, he brought with him some great tech leaders. Which is fantastic. We're actually opening an office in the Atlanta area because there's so many people that want to continue to work for him. So you got the right person when people want to come work for you, and they don't even know the company they want to come work for.
Pretty cool.
Sure.
But we've been migrating toward a hybrid cloud strategy for several years now. And what we're doing is expediting that. We're moving more toward public cloud for a variety of reasons. The flexibility that you get with API type capabilities, the speed at which you can develop because of what's out there, the opportunity that presents for us in an open banking and banking as a service arena, because it is in public cloud. It just also frees up capital because now I can operate on I don't have to build out infrastructure that's 3 times the size of what I would normally need to deliver. I can pay as I go based upon the need and scale on demand. And it's highly resilient. And our customers will benefit greatly from it because of all those things. So it's an investment for sure. It takes us beyond the hybrid cloud strategy more toward a purely public cloud play. And it's going to take us a few years to get there. Our priorities are on those things that touch the customer first, digital payments, those types of things. And we'll have that out in the near term.
Great. Something that I think the bankers, everybody's like, so what's a cloud, right? And what we're really talking about here. So I've got a data company, and we used to have you'd have your own servers, you'd have them on a server farm, and you've got all these things that go into this.
We're in the back closet, right?
Yeah. You have your backup system at your mom's house and stuff.
Yeah.
And you've got updates, Microsoft does an update, somebody, and it crashes your server, and then you've got to upgrade your SIM and all this kind of stuff. And then we move everything to the cloud, which, this is basically like a super farm in the sky that knows how to automatically share. So what it does is it allows you, if you get let's say you have 5 people a day that hit your thing.
Until it's tax day.
And then you have 500 on tax day, right?
Yeah.
All of a sudden it opens up more expansive, and then it shrinks back down. Only charges you as you need it.
You can bring more servers online to fit that need and then scale it back to lower your costs.
This is the good part. Okay. This is the part everybody misses. So just like everything else in technology, people start going, well, that's pretty cool. How about we build a special tool that manages that more efficiently or adds this neat feature? So when he talks about having new things that come from being in the cloud and having more efficient APIs, that's really where this efficiency comes in, is taking advantage of new tools that are built just for cloud technology.
It's definitely a foundational conversation, which gives you a lot up above, right?
Right.
It's great.
Yeah. It goes beyond. It goes beyond software as a service. It's now software as a service, infrastructure as a service. It opens so many opportunities with every fintech that's coming online. That we want to empower to have access to either banking services through banking as a service, or we want to enable our customers to utilize whatever fintech they want to use for to access their data. It really empowers that. The speed to deliver is going to be substantially improved when you have this in place. And there's another thing too. there's some standards that have been introduced, FDX standards, financial data exchange standards. And a lot of people have, we'll call it API type calls. A lot of our competitors do. We're writing everything to the FDX standards so that it becomes even more easy to interact. The third parties that are out there, the smaller companies, the fintechs, the startups, they'll have quicker access to this. And that means our customers will have quicker access to a variety of new products and services.